Dornbush, download number 92. Good morning, Andrew. Little sort of travel weary, just literally hopped off the plane from Sydney. Of course, Michael. Good morning, Michael.
Good morning, Andrew.
Literally good morning.
Yes.
So I thought I might just sort of share a couple of my learnings from my trip to Sydney. We're also going to talk about a couple of IPOs that are coming along as well, and then maybe just a general market comment as well, in no particular order. I went to Sydney yesterday, and part of that is we're sort of going and talking to different product providers about things they have on the go at the moment, talking to E-Trader, as they're known as Share Investing Australia, about how they're all going. But probably the key takeaway is also visiting fund managers and sort of seeing how they're going, but also just trying to get a general feel for how the world's going. Love Toowoomba. Toowoomba's a great place, but, Sydney is really the financial centre, and, talking to those guys just gives you a different point of view. So relating to having a chat to the likes of these fund managers, the key takeaway I got, Michael, was that they don't think Brexit's going to happen. So in other words, they don't think England's going to leave the EU. And I said, well, what about these polls? Like, these polls are sort of showing this. Ignore the polls. Look at the betting markets. Right, makes sense. Follow the money. And on average, it's about a 70% chance that England won't leave the EU. So, there had been some chatter in markets around this being potentially an issue. And I'm not suggesting that it isn't, but it's probably, we saw last year with the UK election how bad the polls were, that the Conservative Party was meant to sort of fall away a bit, and they just romped at home. So don't pay attention to the polls, pay attention to the betting market. So we should do that for the our upcoming election here in Australia too.
Absolutely.
And then their view is that coming into August, so basically July, it should be a pretty good run because there's no bad news about it. And historically, July is actually one of the better months of the year for the share market because we see a lot of tax loss selling take place in May and June. People get their super contributions come in. We see bank dividends come through as well in early July. So certainly the expectation is that at this stage, July should be okay.
Yeah, look, that all makes sense, Andrew, doesn't it? And as you say, historically, July is typically one of the better months. Doesn't always happen, of course, but you're right, there's usually a bit of an inflow of funds around, as you say, bank dividends coming through, so there's usually money in the coffers, and most people are sort of happy to sort of throw it back into something. And I guess too, throw something maybe just on top of that. We saw the Reserve Bank yesterday keeping interest rates on hold, of course, and probably reducing their bias towards another rate cut. However, we do have inflation figures coming out in July, and the talk is that if those are weak again, perhaps August is the time for another cut. So throw that into the mix as a potential boost for the market as well.
And what you didn't say, but I'm sure you were about to say before I rudely interrupted you, unbelievable, is that in fact the RBA usually moves in pairs. It's not usually month to month, but usually sort of within 2 or 3 months of one interest rate cut, they do cut again. So so again, pulling out the crystal ball, the owl entrails, however you think we look at the future, the dartboard around the corner, it is certainly looking for July. And I know we're in early June, and June historically is not such a great month. Historically, June's actually a pretty poor month. Over the last 7 Junes, 5 have been negative. Bit of tax loss selling. July is looking okay. So that's sort of a general feel for the market. Next thing was upcoming IPOs. We spoke about this a little bit last week. You might want to just elaborate again, Michael, because we now have our allocation of NAB notes. Do you want to maybe just a quick run through on those?
Yeah, certainly, Andrew. NAB joining the queue again of banks raising more capital, Tier 1 capital. So NAB's brought out another note, the capital notes number 2. Pretty good margin too, Andrew. We saw the Commonwealth Bank, of course, earlier in the year setting the tone with a 5.2% margin above the bank bill rate. Westpac only a few weeks ago came out with 4.9%. This new one from NAB, 4.95%. So slightly better than Westpac, but in those high fours. Unprecedented that the big four banks offering margins with those sorts of levels. So We do have a few put away for clients, so if you're interested in some of those, call up your advisor here and have a quick chat. All NAB ordinary shareholders, of course, will get their little invitation slip, and hopefully we'll have those this week if you haven't already got those.
But I guess doing it through us means you get a guaranteed allocation. Assuming that we give you some, of course, is a guaranteed allocation. Whereas if you go through NAB, I mean, you'll certainly get some through NAB. I'm not suggesting that you won't, but we can say, right, you've got X, so you know straight off the bat.
Absolutely, and certainly based on the demand for them, we could expect a scale back through the general offer. So, and we of course got a bit of a scale back.
Well, we got scaled, and like you look at that Westpac offer, like once we offered it to clients, like it literally was done that day, wasn't it?
Absolutely,
like it went like that. So we've got a few more NAB, but you know, I would expect that equally so they're going to go pretty quickly too. Speaking of notes, there's another one that we're doing as well, probably a little bit more at the pointier end.
Yeah, definitely. Yeah, offered by the Mercantile Investment Company.
Publicly listed?
Yeah, publicly listed ASX company, effectively a listed investment company. They internally own a few privately held, businesses, I guess, or non-ASX listed companies themselves. But more a bond investment. These capital notes from, say, NAB and Westpac typically have that scenario where you can convert to ordinary shares. This particular issue will be very much in the traditional bond make. So, you buy them at $100 each. At the end of the term, you get your $100 back. But very impressive looking interest rate or coupon rate, 8%, and that's fixed as well. So if there are any further interest rate cuts, those that'll be very attractive to those types of bonds.
And it's being managed by Sir Ron Briley, who's, for those of us playing at home, is a legendary investor over many years. So certainly
he was Guinness Pete, wasn't he?
And certainly the people involved with it, Gary Weiss, guys from Sandon, very impressive. But you are taking on a bit more risk, hence the high coupon as well. So again, have a chat to us about that. We can see whether that might suit you or not.
MBT, I think, is Mercantile's code, isn't it? So
absolutely.
have a look if you're interested at the underlying issuer.
And then part of my trip to Sydney also was to talk to people who help us with our IPOs, and there's two new ones coming. I won't mention too much about them. One's private equity, and another one's it's hard to describe it, but basically it's a business like Credit Corp that will also list on the ASX. Certainly in the capital raising side of life, plenty going on in that regard.
It's been very healthy on the IPO side, hasn't it, for sure, this year?
Yeah, well, we've got, 4 on the go at the moment? It's crazy. Okay, so that's about it from me. Anything else from you?
I think that's Andrew.
Excellent.
Good job.
Till next week. Thank you.
Thank you.